This is the Daily Market Comment by Rafi Boyajan. I'm Maria Bashardez. Thanks for joining us at XM.com. Bond markets were left reeling on Friday following the sell-off on Thursday in the aftermath of the Federal Reserve's lower-for-longer commitment. The yields on 10- and 30-year Treasury notes skyrocketed to fresh highs yesterday as more investors dumped their holdings at the long end of the curve, which is unprotected from the risks of higher inflation. Although the Fed couldn't have sounded more dovish this week, Powell and his colleagues have inadvertently given the green light for yields to continue surging by signaling that they are happy to let inflation overshoot their target as they prioritize growth and employment. Stocks came under pressure on Thursday from the steepening of the U.S. yield curve, but it was the tech-heavy Nasdaq that took the brunt of the panic selling. The Dow Jones Industrial Average suffered the least yesterday, closing 0.5% lower, while the Nasdaq Composite plummeted by just over 3%. Asian stock markets followed suit today as major indices were a sea of red, though Wall Street futures staged a comeback during European trading. But apart from U.S. futures, the only exception was Japan's Topix Index, which got a boost after the Bank of Japan said it will maintain its stock buying program for ETFs tracking the Topix, but end it for ETFs linked to the benchmark Nikkei index. Predictably, the Nikkei 225 took the news badly, dropping by 1.4%. The Bank of Japan's tweak to its ETF purchase program was one of several changes announced at today's policy meeting. The bank also slightly widened the yield band around the 0% target for 10-year JGBs by 5 points to plus or minus 0.25%. Investors read the Bank of Japan's fine-tuning of its ETF purchases and its yield curve control as stealth tapering, pushing the yen higher across the board today. The US dollar briefly slipped to a one-week low of 108.59 yen before recovering slightly, but was mostly flat against other majors. The French government announced a fresh lockdown for Paris on Thursday, and combined with rising COVID cases in some other parts of the world, oil prices plunged yesterday. WTI futures slumped by more than 7%, and Brent crude fell by 5.5% as investors downgraded their forecasts for oil demand. However, both oil futures were about 1% higher today. This was today's Daily Market Comment. Thanks for joining us at XM.com.